Yeah, see the daily. Greg, do you want to do the 15-minute analysis, mate, and share screen?
Okay, 15 minutes, yeah?
Yeah,
Just
let
one
Greg,
sec. Yeah.
let Greg take over the chat, mate. You just start share. I think you've got to stop sharing, Rustum.
Oh, okay. Okay. Are you still there?
Yeah. He'll share from there, mate.
Crikey. So, yep. Okay. Share screen 2.
Just do the 15-minute analysis, mate.
Yep.
That's it, yeah. See that?
I hope it's recording Greg's screen now.
Yeah, it should do.
Okay.
It should be. Yeah. It's, oh, it's got start video.
Yeah, I can see your screen.
Yeah, we're recording anyway. No, I don't think you need to do anything, mate.
No?
No.
Okay. So just coming back out off of that daily, you can see that we've pushed off of the lows reasonably well, put in this nice bullish move. A little bit of structure in between on the higher time frames. That would have been less visible. Down here on the 15, you can see that we went sideways before pushing back up, and we've since just kind of gone sideways in this kind of descending triangle that we've got, flat bottom triangle. Generally, you could say that statistically speaking, a triangle like this, it's more likely to exit the same way that it entered. So exit to the upside, and it's just coiling like a coiled spring. Like I said, like we mentioned before, I thought we might get a little pop on this push down here. I stayed up. We didn't get that. It just pushed back up to the top of this channel. Originally, I had a little box on here just because we'd pushed back into it several times. This one kind of missed the mark. And when we missed it for a second and a third time, that's when you can draw this kind of descending trend line. And we've just been coiling ever since, pushed back up to the top. And you can see now that we have once again pushed off the top. So certainly expecting this to push down. We may continue to do that. However, what we are ultimately expecting is for it to push down here. Obviously, anyone positioned down here trying to jump on this, they will be looking at this extended move up and trying to kind of pinch off a piece. Being a pound pair, the ATR is quite steep. If you're going long, all of these positions, well, if they're long, their stops are sells. So there is a whole heap of cells stuck right under this level, and if it continues to develop, it will accumulate some more cells. So if we look left, we're actually looking for a couple of levels for this to bounce from, and I did have a nice little zone picked out here. Well, here's certainly one of them. Here is immediately identifiable, is where we've bounced off this multiple times. Let's just pull that to the left. And you can see there is this kind of zone. We could draw a little box there if you like, that is acted as support and resistance. So, oh, beg your pardon. So what I will be looking for is a push down. Now, that is something you will have to judge. It depends on how deep this pushes down. It may just touch the top, may push right down. What we might find is we'll push down, touch the lower level, and then we'll get a push back up to the level, and then it might even try and touch the top level before before we see some acceleration.
Yeah, so you're using prior structures as well to see where the stop point might actually turn.
Yeah, indeed, and that's really key. We know there's people positioned under here. We know that the market is going to need to accumulate a lot of sells in order for the big boys to buy, and then we're looking for the next nearest level where they would potentially turn the market from. And for me personally, it's this nice little zone here that is readily identifiable. I mean, it may push a bit further down. What you'll find is you've got some wicks in here, and you've got a couple of points here. If it's quite a brutal stop hunt, then it may push to this lower level. But it's just one of those things that you'll have to identify as it's playing out.
Yeah. So as it's breaking down, just one bit of advice I give people is, as it's breaking down and it's going to pop off because it's going to be smashing through all that liquidity in those orders. So it's probably going to be fast paced. Don't panic. Just think, where's the buy-in? Where is it likely to turn? I'm looking for clues that this is going to go up now as it's breaching down, right? So it's very easy for people to like get panicked and seeing this thing breach, but that's actually that's what we want. We just want to see some signs of buying, and these points, who knows how far, but these points will help give you confidence if they turn there.
And at which point, Mark and Greg, would you decide that it's gone down too far and my idea is wrong?
That's a good question. It's kind of like it breaches those ideas. That's the first thing. And it just does it in a relentless manner that doesn't look as if it's... in my mind, when things break into these zones of liquidity, I'm actively thinking the counter to what's currently happening. And if I don't start seeing that pretty quick within the first sort of 2-3 candles, then there's a good chance it might not happen,
Yeah. I mean, if we start seeing some huge candles that are kind of...
Yeah, just monstrous, just like
monster,
selling.
You can pretty much just take a step back and go, whoa, whoa, whoa.
Yeah, but it's not, and then closing near their lows as well, right?
Yeah, no wicks, just big, bold candles. But if we're getting some kind of wicky action and it's just kind of moseying down, I mean, I don't mind one big candle, because obviously, we take out all of these, it's going to push down. But if it's just kind of moseying down into the level, and then we get some wicky action, then yeah, that's a good key indication.
Yeah, you just got to see. But there's loads of money under that level. Absolutely.
Yeah, I mean, just look at it here. There might be potentially some people hiding some stops under here. For it to get down there, though, you can pretty much safely say that this is blown, really. Yeah. For me, it would be, personally.
Yeah.
But that's, I mean, look at that. I mean, it doesn't get much more beautiful. It's a work of art, that. It's beautiful. So originally in my video, I had this channel at the top. But seeing as we've now developed into this descending triangle, I would have no qualms with pushing that potential TP maybe a little bit further.
Yeah, and the thing is as well, you're going to get into trouble at those highs, but because you've got that fundamental backdrop, anyone selling off that descending trend line at the top there, they're all going to get stopped out. So that's going to drag price higher.
For sure. So you've got all these buys sitting up here.
They're all sitting there. So that's going to drag price higher. And then you're going to get into that level, which is what we discussed on the higher ups. But if there's going to be a level break on a higher up, with the backdrop that we described earlier, that's going to be it. It's like, and will it happen? Who knows? We don't need to know, because we can manage those positions, and it's not so much for us, you know, oh, I'm going for 2 to 1 or something like that. We have the ability to not even care just to manage what it does.
Yeah,
which I think
yeah.
is profoundly different to what most people, you know, think of, are capable of, understand.
Yeah, I mean, let's just discuss that for a moment. So we push down to this level, and I mean, we don't know where it's going to end, but let's say we push down to this lower level, and then you position yourself, you know, 10 points below the low. So you're at 30. What's that? Yeah. So you're at, say, 30 points. Okay. You might want to position yourself below this area, but say you position yourself 10 points below the low. If you're a fixed 2 to 1 trader, I mean, you haven't even touched back inside the level, and we're talking. I would like to see a retest of the high of that point as a minimum. As a minimum. So, I mean,
Yeah.
that's a 6.6. But look, that's from where we are now. Your risk reward all depends on where you get in, how you get in, whether you're looking for hitting it at the bottom. You know, if you're a confirmation type of trader, so you're waiting for it to punch back inside this level and retest it from the other side, obviously your stop's going to be kind of that much bigger.
Yeah.
So even at 2 to 1, you know, you're only looking kind of mid-channel, or so 3 to 1 is a kind of top of the highs.
Yeah, and I just go back to, like, if they stop onto that bottom edge, with those fundamentals, that sentiment and everything else behind it, you know, if there's going to be resistance levels breached, that's going to, you know, we're in the perfect storm for that to happen. And as I said, you know, we have a strategy which is extremely unique, that allows us to stay with these trades for ages, right? Well, Rustum, what were them numbers? What's the biggest pip run you've had?
The biggest pips that I've had is 2,500 pips.
Right, no one would believe that, right?
No, that's why I'm gonna delete that. I'm going to edit
Oh
that.
no, don't delete it out.
No, because I've read somewhere, or some comments on some other YouTube channel. The guy was doing some analysis, and he said that, look, he's made 1,500 pips. And then in the comments, the guy said, look, I believed him up until he mentioned how much.
Yeah, well, I don't care what people believe. That's exactly what was achieved. So we're gonna allow that in this video, because that's the reality of the strategy that we have in terms of taking profit. We don't freak out about, oh, where do I get out? Like, is it this level? Is it that level? There's some of that, but we have a strategy which is completely proprietary that allows us to get in trades like that. It seems insane, but we've got it.
Let's perhaps we can hypothesize about potential scenarios in this trade if it were to play out.
Yeah, do it.
Okay, so let's jump out. Let's jump out of time frame. I mean, even on the 240, that's a piece of art right there.
Yeah.
So yeah, I mean, let's hypothesize. We come back down, we test this lower level, we push back up inside, we retest it from the other side. You've got some kind of failure or reversal pattern or candle, and you're now long. You're looking
stops everyone out. Yeah,
stops everyone out. This is like, I mean, the amount of money under there. Once that stop occurs, generally speaking, you're looking at some pretty serious acceleration. and at minimum up to this level. And if we break this level, this is obviously this is quite a. If we just push this to the left, this is quite a major
level. Yeah,
quite a major level in here. You can see this is a major level. So this type of trade, it would allow you to potentially see it through to the top. If you're, depending on what type of trader you are, you may be looking to scale out of a position, or certainly take some profits at the top. But if we breach this level here, if I just zoom in to the left here, barring this kind of section here,
not much in the way, is there?
What have you got? There's potentially
it's at the highs where there's a bit of trouble.
A little bit here, but and that's kind of what we're pointing at, is that these type of trades you can chase up to these levels and just follow up. It's not going to be a straight line. No one, nothing to say that you're not going to get stopped out in between those, but what we'll be looking at is acceleration, stop hunt, potentially back down into one of these levels. You might even get one back down into here.
Do you want to explain the stop hunt trail? Because I just think people will get so much fucking value out of that. And explain why that's different to the normal number trailing and the normal swing point trail. Yeah,
sure. So
this is how Rustum gets 2,500 pips, right?
Yeah. So stop hunts come in many forms. This we can see quite clear is potentially one of them. And what we will be looking for is you will get your generic push off, you'll get a push back down, and then you'll get a higher high, and then you'll get some kind of form of I'm just going to delete that for a second, and then you'll get this kind of action here, and everyone will generally, let's just move that up a little bit, everyone will generally position themselves kind of under this level here, and what you'll get is this action, and probably not very proportionate to what we're looking at, but it gives you a good idea. And then what you'll get is this kind of action here. So everyone will be positioned under here, and you'll get another stop hunt, and this will just ride to the top. So all those people positioned under here will just get cleaned out. So what you're waiting for is another one of these stop hunts to occur, and then you take your stop and you put it under here. And then the whole process, you can pretty much copy and paste this whole process, whether it be a ascending, descending triangle, or whatever it is. What you're looking for is a manipulation where lots of these traders will be positioned here, and any generic kind of vanilla support and resistance, they will be positioned here too.
Yeah, and they'll get stopped out, right? So the two types of trailing that's described is the numeric one, which is horseshit, because the market doesn't give a fuck about random numbers that you're just arbitrarily placing upon it. So that's useless, and that deserves a bad rap. The other one is trying to hide behind swing structures to place stops, which again is horseshit, because the market always breaches swing structures. So what we're saying is use stop hunts to trail. Now, to get 2,500 pips, and granted that might not be on your full position, so just for full disclosure, it may be, it may not be, but the point is, you were able to hold a position that long that allowed you to profit greatly overall. To get 2,500, you have to be willing to give up, from 3,500 to 2,500.
Yeah,
so you got to give to get, right?
Yeah, the thing is, with the long-term goals and things in mind, you first have to have a short-term goal. So the short-term goal is, for me, taking out whatever I've risked. So if I've risked 1% on a particular trade, I want to get this 1% banked as soon as possible. Yeah. So it's then the final position, I'm able to hold on to that final position because in my mind, it was a winning trade already. Even though I'm not putting the stop at break even, yeah, after I'm at 1%, after my risk is out, I'm not breaking even. I'm still following the stop ons with
Yeah, that's important. Yeah,
but still not. I have to take something off the table to, maybe for my brain to allow me to hold on to the next part of it.
to the rest. Yeah,
Yeah.
Yeah, yeah.
that's a great point. Sorry, Greg, go on.
Yeah, I just wanted to say that there's many iterations to this stop hunt that you can get, and the old classic is the initial push up and your Fibonacci as well. So
Yeah.
a lot of people love to push up, and they take that first Fibonacci level that comes to mind, or might be deeper, it might be a 50% or whatever, and then you'll get this action as well, and that's just a classic. That's just a recipe.
Stop on. Yeah.
To happen,
So there's a lot we've just said there. So what Rustum's saying is his particular strategy is to take off. So if we were going back to where that triangle descending like pen and wedge type things going on, if we get the stop on the bottom edge, he's probably going to take off his risk at the where you can definitely see there's trouble at those highs. But then he's in a free trade, and from there he's thinking, right, now I'm just going to trail it stop hunt wise. So again, just to reiterate, what is the best possible, most efficient way to trail a trade? How can you get to those multi-thousand pip positions? And in all my years of trading, this is the only thing I ever came up with, and it's to not trail the numerics, because that's just bollocks, because it just doesn't know anything. Not trail swing structures and normal tech analysis, because again, they all get stopped out. So therefore you're left with thinking, well, only trail the stop hunt. But the stop hunt, I'm not saying like, so there's two things that can happen there. You can not get a stop hunt, and then you might be up a couple of hundred pips. It comes all the way back. You shouldn't lose from that position. But you should be mentally capable of taking the fact that you were up 200 and now you're at break even. If you can't develop that thinking, you're still struggling mentally. And the only way you're going to get 2,500 pips is to be able to be okay with that and get outside of the immediacy of this particular outcome. Because if someone was up a couple of hundred pips and they've got no stop on, and then it came all the way back and stopped them out of break even, you shouldn't lose from there. But a lot of people would see that as a disaster, right? But it's just a false start in a monster trade that you will eventually get. You have no choice. You're going to get on it. You will be involved in those trades. But as I said, to get 2,500 pips, you probably have to give up 1,000. You got to be able to do that. There's no other way of getting to those numbers. Not that I'm aware of.
Yeah, and also 2,500 pips comes maybe once a year or something.
Yes, yeah, but the bottom line, right?
Yeah,
that does for your bottom line.
I was going to say, what was the time frame? What was the time span of that 2,500 pips? You must have held that for some time.
It didn't take long. It was the pound versus the yen.
Oh, there you go.
And it wasn't. Let me see. Usually, it was basically the analysis, like what we're doing or what we did here was like looking at the weekly time frame and checking out whether there is a potential for it to move up, to move
Yeah.
that much.
Yeah.
So also any trades that I do take, I hardly take the trade if there is no such potential.
Potentially, that's a great point.
Yeah, and then and the potential is based on a lot of factors, a lot of various types of traders. Like we do get level traders, or we do have level traders, and we do have Fibonacci traders, and we do have Elliott wave traders. So if all three of them are, all three types are agreeing that this is some sort of a level, and then for me, then that is a valid level. Yeah. Even though I'm not that type of a trader, I know they are watching it. So the price might head all the way to that level. So that could now be my potential target.
Yeah. So what Rustum's saying there is super, super important. It's like, it's a bit like the video you did yesterday on the channel. And just for those who are a bit confused by the fact that I've had some intruders on the channel in the form of Greg and Rustum. They're not intruders. What I'm doing is we're just sharing the love, because these are my guys who've come through and who are trading professionally and profitably over sustained periods of time, and they obviously have come through my school of thought. They've developed their own things as intelligent people themselves, and it's just bringing the whole conversation forward. So you can expect a lot more of it, and you can expect more people to join it, because we're not being selfish in this stuff. The goal is to raise everybody up. So just going back to your point, Rustum, if you want to continue on.
Yeah, so it's not that every time I hit the buy or sell that I'm getting that much. For me, it's still just it was the best ever trade for me, the best one ever. Yeah, so it's something maybe to to try and do again, but the potential has to be there in the market. I mean, nobody can do anything if it's ranging. What do we have on the chart now? The 4 hourly, yeah. So if it keeps on hitting that level, nobody's gonna make more than what is that, 200 pips or whatever from
to the top.
Yeah. So if it breaks through there, then it's lucky you took your entry there at the bottom where the stop punt was, and it actually broke through. So now you have a potential for it to go all the way up to the next level. Nothing to do with how great you are a trader or whatever. It's just that's the way the market moved for that particular time. So the potential is there when the fundamentals are there and the levels are looking good. So I take this trade, perhaps I'll take this trade and get my first one or my risk off the table nice and quick. And then if it breaks through, then it breaks through, and it's another good one. Yeah.
And all I would add to that is that, none of us know, but that earlier analysis that we were doing with the sentiment and news articles and fundamentals and things, that we're not blindly just saying that we don't think it's going to break a level. There's a good chance it will, but we don't, who the hell knows? No one knows. All we're doing is it's our best estimate based on some pretty sound research and understanding of where we are. So.
Yeah, and that's the whole process as well, Mark. A trade idea is only an idea until you actually put it into practice and implement it. And having all those bits of information certainly can lead you or point you in the right direction.
Yeah. But that trailing stop idea, just going back to that just for a minute, it's pretty nice to go into a trade with no expectation or requirement of having to exit or figure out where's the best place to exit. That's what's so beautiful about that idea. that you can just allow the market to tell you what to do.
Yeah, and I think Rustum's got a great point in the way that he deals with trades, and I'm quite similar, as in the fact that I will take positions off. That means you've got your risk off the table, so to speak, and then if you do get that break, those once in a yearlies, Rustum seems to be pretty good at. I mean, I must get you on my. I must get you on a mailing list, Rustum, for the next 2,000. but those are the ones that will make a massive difference to your end of year performance. Having the ability to hold that position and chase it, and having multiple positions is something that a lot of traders don't really entertain.
If you always do what you've always done, you'll always get what you've always got.
Yeah. That's it. Yeah.
Right, and very few people are prepared to do the unusual. The basic default setting is to, take a couple of hours and bail out, and that's my trade over, and because I can't possibly, figure out a way of holding on to that damn thing.
Yeah.
But we have. We have. So that's amazing. Well, yeah, go on.
Yeah, I was just going to say, I was just going to remove all that, and it looks quite inconspicuous, doesn't it?
Yeah.
Once you've taken that all away.
Yeah. You've got a flag there, haven't you, more or less? What's that on the 240? See it?
Yeah. Yep.
Do you want to highlight that, Craig, just to...
This bad boy here.
Well, even less than that within there, mate. So from the low, yeah, that is right. But from the low of this prior move, up, down, 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 down. Well, yeah, there you can show on that level. Off to the right. Grab the trend line on the right, mate. Keep going, right. Yeah, just shorten it from there. Yeah, that's all you need, really. And then put it on the top. And then put it on the move up from the lows. There you go. However you draw it, it's a flag, a pennant, a wedge, whatever, it's bullish.
And where does that take us? What do you know? What do you know? You can't make this stuff up, can you? Right slap bang in the middle of that zone.
Yeah, that's a nice zone, actually. Which is how many pips?
I don't know, my ruler hotbarred, so let's do it that way.
3.
Let's call it to the middle, 370. From the bottom of the flag.
Yeah, you stop.
Right.
There's a lot less than that as well.
And imagine it breaks through your resistance there.
Yeah.
What is the potential from there to the very top?
Well, I think at the top you're going to have problems right at the top because you've got a bull trap at the highs, a rat trap.
Yeah, so you'd probably come down. I mean,
yeah, it's the bottom of that. Yeah, basically that's it. Yeah.
It's 1,000.
But imagine you've got your risk and stuff out at the orange resistance, yeah, and you leave something running.
Yeah,
and then that's your 1,000 pips right there.
Yeah. Can turn a quarter around that trade. And that's what nobody wants to do it. Nobody wants to stay in trades and hold these things. But
this won't be sweet sailing. We're gonna get all this jazz. But
we have a way of being able to call. We've got a way of being able to cope through that, though, right?
Yeah, and in between here, you're going to get the little stop hunts, you know, especially when you see these accelerated moves.
Yeah. Cool. Well, has anyone got anything else to add? Because I think we're about ready, running out of time.
No, all good from my perspective.
No, it's good, guys, good.
Yeah, good from me. I hope you've enjoyed that, guys. That's kind of the thought that goes into a trade. And if you're not doing that, you should be doing that. If you want to join me in my training, the link's below. If you, I encourage you to join Greg and Rustum's YouTube channels. Their links are below in the description as well. And I hope that's helpful. I hope that's going to give you some insights. This is a trade you can absolutely take. Obviously, this is just for training purposes. We're not giving you financial advice. I hope you've enjoyed that. Take care and all the best. See you guys.